Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, November 14th, 4:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days on the NASDAQ and S&P 500 2 weeks ago on November 1st and November 2nd. Check over here at the trend gauge. We've got the green arrow on market leadership. Plenty of leaders breaking out of sound bases, gapping up on earnings and holding the gaps and following through to the upside. Then let's take a look at the five major indexes. We track them across 3 time frames to gauge how much capital we're going to allocate for our clients. Green arrow, all 5 of the major indexes above their 21-day exponential moving average. That's our short-term indicator. Medium-term indicator, some improvement today. Still on neutral, but small and mid caps. First close above the 50-day moving average in a long time. And speaking of long time, our long-term trend still neutral. Large cap indexes firmly above the 200-day moving average. Small and mid caps still below. But a lot of catch up played today by small and mid cap indexes. So what happened today? Before the open, we had the latest CPI report, and it showed inflation weaker than expected, and the markets took off to the upside and didn't look back on that report. So we had a strong gap up. We held it. In fact, we made the low within the first 5 minutes of the day. Broad participation, breadth was great, head volume was heavy, everything that the bulls would look for follow through strength after a follow through day. In fact, these numbers qualify as a subsequent follow through day. Here are the final numbers. Big cap, the big seven, up an average of 2.33%, led by Tesla, rallying the leader for the second day in a row, up 6.1%. RG8, this is our 8 growth ETF composite. Really happy to see this participate in a big way, up 3.95%, led by small cap Russell 2000 growth and small cap S&P 600 growth, up 5.2%. Again, that's exactly what we want to see. S&P 500 gapped up 1.3%, was up over 2% at one point, faded just a tad into the close, but still up 1.9%. Even better, broad S&P 500 up 2.85%. Why even better? Because it means that the S&P was not led by the big seven. There was plenty of participation. A lot of it junk off the bottom, but that continued short covering is an additive to the market because the bears have to get off they're long twice. If you're short and the market's going higher, not only are you wrong, you're losing opportunity cost as the market goes higher. NASDAQ 100 up 2.15%, even better. Broad NASDAQ up 2.86%. Again, means the big seven it was more than the big seven participating in the rally. Dow up 1.4%, mid caps up 3.86%, Russell 2000 up 5.44%. Global Diversified 60/40 up 1.7, in-house GROTECTION up 1.94. We'll talk about portfolio changes and what we're looking for next when we get to the charts and the tail of the tape. Let's get right into it. Take the stochastics off to see a better look at this, and you can see this breakaway gap on the S&P 500 week CPI report. And that's why does this mean so much? Well, it means, and this is reflected in the Fed fund futures now, no interest rate hikes priced in for the rest of the year. In fact, we're looking at cuts earlier in Q1 of 2024. So this is what the market likes, and it also gets rid of some of the uncertainty of whether or not the Fed is going to be continually raising rates. So we're still in the camp where bad news is good news, and we'll look for more economic data and the reaction to it. And really what we're going to be on the lookout for now is, does poor economic data start to be met with a negative reaction? And that would be indicative of the slowing economy, maybe not a soft landing being priced in for, but that's for another show. Today we're talking about the reaction to the upside. So you can see the S&P 500 breakaway gap above 4,400. with its eyes on this 4607, where we had the negative reversal that led to the three waves down correction. And now we've reclaimed about over 2/3 of that. Let's go to the NASDAQ 100, leading sector. Again, breakaway gap. Uh, really 1% away from this 387.98 pivot, showing relative strength. Terrific action on the NASDAQ 100. Let's go to the Dow Jones Industrial Average, approaching, clearing this 34,000 level, coming into 35,000, which was a little bit of a support resistance level back in July and August. Now, here's what we really like to see. Mid caps, big gap, ran into the declining 200-day moving average and paused. We won't get too upset about that, but we'll celebrate the fact that we not only gapped up but continued substantially higher after the gap up. In fact, when we get to the Russell 2000, I'll show this even more, but above the 50-day moving average, big clearing of the 21-day moving average after battling back and forth around that for the last week. But here's the winner on the day. Small caps up 5.5%, getting above not only the 21-day moving average, which had been acting as resistance the last 3 days, but clearing the 50-day moving average, gapped up 3.4%, closed up 5.5%. So after the gap up, continued strength. Talked about how we wanted to see this clearing this 170 level with the gap up open. We got that. We took a position in this and added to it intraday. Great action across the small caps. Yes, there's certainly going to be some short covering involved in this, and we've got a declining 200-day moving average, 1.6% above, along with some resistance at this 180 level. But certainly good to see all of the five of the major indexes now above the 50-day moving average, as we've been looking for any type of strength. And you can very clearly see last time we had these follow through days on 11.2 and then following up on 11.3, big gaps higher, up 2.7% and on back to back days, but gave it all up over the subsequent week and a half, but got that back and some more today with the gain of 5.5%. Let's go to the VIX. VIX is what we want to see. Down 4.1% today. New recent lows going back to mid-September below that 15 level. That's bullish. How about the dollar? What do you see this? Big gap down. I talked about this triangle. Let me get this drawn in here. I've been talking about this triangle and how it would resolve. We actually faked above the 21 EMA and now the big gap below it. Complete change in character in the dollar, heavy volume, showing 2 on the UUP. That's the dollar ETF. Again, this is a tailwind if you're a bull. How did that impact the precious metals today? Gold, a little bit of a gap up, serious relative weakness on gold. Back above the 21, we see no reason to get back into this as the upside in stocks in a strong bull market blows away the potential for gold. Gold is good when it's bucking the trend of a weaker market, such as it was doing here. Then the market started participating, and gold, just no reason anymore to own it. In fact, if you diversify into it, my expectation would be that you would underperform. GDX has been a laggard for a while, up 4.8% today, and silver also had been lagging on, and is still under the 200-day moving average, but up 3.6% today. Bitcoin, maybe a situation to where if stocks are working, who needs Bitcoin? Down 4.3% today, right back to the top of this double bottom base. We still have a 3% position in this, but we're now underwater on our second buy, which was at the 18 level. So minor loss there. We'll look for this to hold the 21-day moving average, and assuming that spot Bitcoin ETF gets approved and some institutional money comes in to carry this higher. That's what we're looking for right now. No predictions, of course. Expectations, no predictions. Here's bond prices gapping up, clearing this recent congestion up 1.22%. You know, we like bond prices higher because that means the yields are coming off. Yields are coming off. That means that that's a tailwind for stocks. Another gap up to recent highs on TLT, up 2.3%. Now let's look to the yields. Zero TYX. Here's that triangle that I've been talking about, and we broke to the downside. So good stuff there, down 2.6% on the yield of the long bond and TNX. Hey, this ended up being a fake breakout. So we broke out yesterday. From failed moves come fast moves in the opposite direction. We closed at the lows yesterday on yields, followed through to the downside today. So some classic Wall Street sayings coming into fruition here. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. Uh, like I said, no additional rate hikes, and CPI below expectations very clearly triggered the rally. We're very firmly on the bull case. Follow through days doing exactly what they want, what we want them to do, including the subsequent one that we're seeing today. Notes 9 days up out of the last 11 make that 10 out of 12. 10 days above the 80 MA on the S&P, 9 days above the 21. Expectations always positive if we're above the 21E on the S&P and the Nasdaq 100, and that is where we are. 11 out of 11 sectors positive today. Spider sectors positive, and like I said, broad strength, heavy volume. In-house stopped out of the rest of Celsius. Looks like it totally shook everybody out by the end of the day, under 150. We'll look at that chart in a minute. So we stopped out of the rest of that. TNA, we talked about that 170 level, gapped above it. We bought this twice today. We added to our QLD position with the strong gap up in the NASDAQ 100, and we did some offensive trimming in CrowdStrike and Netflix. We'll talk about that. Looking at the charts, bottom line on the day, strong gap up on CPI below expectations, broad rally on heavy volume. Bulls are happy. Bears are getting their fur singed. Let's start off with Celsius when we get to stocks. We're going to look at some screening that we do every day today, as because a lot of people ask, how do I find the leaders? Well, we'll show you two screens for getting them. So here's Celsius. You can see the shakeout under 150. We got stopped the last of this at 158 when it made a lower low under the 21-day moving average. Take this off the leaders list. I won't look at it for a while now. Crowd, why did we trim this? You There are a lot of things that are just coming out of a stage one base. Well, this has been out of the stage one base for months, making a higher high. You see this green area. This is the profit target area. Now, this could continue to scream higher, if it does, we'll still be involved. We only trimmed a third of it. But taking some double-digit profits on some things that are extended. This is between 3 and 4 ATR extended from the 21-day moving average. That's crowd. Netflix sold half of this uh, into this 450 resistance area. This looks great, riding the ADMA up. It is not doing twice the S&P 500. And with the gap up here and pulling back below 150, only up 0.91% of the day. It was the weakest of the big seven. We cashed half of it, and that was part of the funds that went into the TNA buys and the QLD buys, along with the sale of Celsius. So net, we increased our exposure from 1.48 to 1.54, and that's where the S&P 500 is equal to a 1.0. So those are the three charts. Let's do some screening. So every day I run two screens several times, up on volume, liquid, and relative strength, new high, liquid. Let's open these up and see what the criteria is. So we're searching the entire MarketSmith database for stocks, non-ETFs, trading above $10 with a 50-day average daily dollar volume above 40 million. We run over $120 million here. We can't buy thin stocks. We screen for 40,000, but we're not likely to buy anything unless it meets our $60 million minimum, preferably over 100 million. We're looking for a price up more than 2% on the day, volume percent change more than 50% above average, and the price against the 200-day moving average to be under 0.5% or greater. Basically, we don't want to see garbage things gapping up. So let's take a look at the results here, and we're just going to scroll through them. Just the top one. So up on volume, liquid, we ended up with 43 names. Let's take a look at some of these charts here, and you can see Stoneco, recent earnings winner, follow through with the day higher high. Here's the results of this: price percent change, volume percent change. Home Depot gapping up on earnings, still not really something we would get into. ACOM, building heavy construction, gap up on earnings. Nice response there. Shark Ninja, an IPO, not interested in that. Something I am interested in here, Net, Cloudflare, gap up on earnings, or I'm sorry, follow through to the upside after it had a nice reaction to earnings and then consolidated here. If you look at the weekly, this has some overhead, as you can see going back here, but this is a pretty nice looking base on base on base pattern that this is forming, and they're going to turn profitable. They did turn profitable in 2022. Not the best earnings growth projected for 2024, but this is great volume action today on Net. That's on our watch list. SMCI has taken a beating, but it's trying to form a base too, up on volume today. Twilio, same thing, a lot of overhead supply. Positive reaction to earnings, got above the 200-day moving average today. Fortune Brands, this is a builder. Nice move up today. A lot of, let's take a look at the ITB ETF. And this is one of the reasons why a lot of these builder stocks, nice tight action here after the gap up, after the follow through day. And with the drop in interest rates, money's flowing back in to the home construction sector. Let's take a look at one more here, DraftKings, because it's on our short list for things to buy, bouncing off the ADMA. They had an investor day today. It initially gapped down, but volume came into it. So that's going to be the first screen that we look at, up on volume. Then we look at what's making a relative strength new high, and these are also liquid. So no ETFs, trades above $10 a day, also $10 a share, and average daily volume above $40 million, relative strength at a new high. Let's take a look at some of these again. These are sorted by volume percent change, and some of these are repeats from the prior list. Here's DraftKings on here again. Toll Brothers, we mentioned builders. Nice cup and handle breakout there on Toll Brothers. Howmet Aerospace, this is a defense stock, reported earnings, gapped up a couple of about a week and a half ago, following through to the upside. I want to make a note of this one because it's not anywhere on my universe list. KKR, big gap up. They're in finance and investment management. Uber, another one on our short list to buy, getting away from this double bottom base now. Take Two, gapped up on earnings, relative strength, new high. Well, these are all relative strength, new high. Duolingo, fourth day of a higher high, one of the strongest stocks in the market. Zscaler, gap up. This acts a lot like CrowdStrike does. So since we like Crowd, we're not necessarily interested in this. ITT, machinery, gap up, relative strength, new high, as these all are. Pulte New Homes, nice, another home builder gapping out of a cup and handle. Cadence CDNS, look at the tight accumulation here, the blue bars, since its earnings report. And here's CrowdStrike, which we took some offensive profits in today. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. I always say it's not how much you make in the markets, it's how much of that you can keep. When the market is rallying strongly, this is an odd thing to say, but 75% of stocks will move in the market's direction. The only way you can get hurt is if you're not participating. That's what we strive to do here, is to minimize the downside when the market's weak, participate. Sometimes you have to flip on a dime when the market goes from weak to something happening, like we had with the follow through day, and now today with CPI, reaffirming the strength in the market. That's what we're here to review every night at Revere. We appreciate your likes and your comments on YouTube. Please tell your friends if you think they'd benefit from our work. We like spreading the news that you don't have to be a slave to the market. You can participate in the downside or avoid the downside when the market's weak, participate in the upside when the market's strong. And with that, I'll wrap up the video for Tuesday, November 14th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.